Paul, should we move on?
Yeah, let's do it.
The next company we're going to look at is Activision Blizzard. Again, we don't know much about these companies, folks. We're using our 8-pillar analysis as a general screener. Should we look deeper? And so we'll start. Paul, what is this? Oh, I see. And Paul is showing off the new Everything Money website that our patrons will be getting come April 15th. And Paul, you got a couple lines on there, I think. Let's look at it.
Oh, look at that.
Yep. All right, Activision Blizzard, Paul. What is the market cap for ATVI?
Almost $80 billion, 79.33. PE, little high, 36. But profit margin, solid, 29%. Check mark there. X on the PE with a 73%. So it's a lot like EA Sports. Similar margins overall, double the price, but the PE also high as well. But that's okay. Let's keep going forward. We figured out that
that's 3 straight PEs are a little high and 3 straight really great profit margins for Take-Two Interactive, Electronic Arts, EA, and Activision Blizzard. Pillar number 3 is revenue growth over the past 5 years.
Slow and steady, guys. 5.95 billion, 7.66. Check mark. If you saw the early 2010s, it was very stagnant. And they're starting to build back up again. I love it. Check mark all day long. I love the slow and steady growth. I love it, I love it, I love it.
Profit growth is pillar number 4, Paul.
If I wasn't 872 million, 2.21. Check mark there.
That's pretty good, okay. How about shares outstanding is pillar number 5, Paul?
Oh, you're killing me, guys.
What are they
Not
doing?
bad, though. 2.95 to 3.08. It's an X. It's not terrible, but it is an X.
Pillar number 6 is current assets over current liabilities. What we're doing, folks, is going through our 8 pillars. The website that our patrons will be getting, this will be a one-click button that you can click and get all the 8 pillars, all the information. It's going to be incredible. Paul, this is current assets over current liabilities.
9 billion versus 2.2 billion. Plenty of room there. And another one with less liabilities than cash on hand, total liabilities. So it's not a big enough number. It's $1.8 billion positive. There's 7.2 billion in total liabilities versus 9 billion in cash. That's awesome, guys. Great balance sheet just from that view.
Free cash flow growth is pillar number 7 for Activision Blizzard.
Free cash flow growth. It's 1.64 versus 1.95, call it.
Okay.
Check mark there.
Okay.
1.8, 1.8, 1.8.
Okay.
So 1.8 is their average.
Yep.
Times 20, even though it probably shouldn't be 20, 36 billion.
Yep.
This thing's got to fall big time. This thing's got to fall in half, guys.
So what Paul did there is our transition from free cash flow average to price to free cash flow, which is pillar number 8. So we take our free cash flow, we multiply it times 20, which is our multiple in relationship to our PE ratio. And you got a desired market cap of what, Paul?
36 billion.
36. And the actual retail price is $80 billion. So this thing needs to fall before Paul is buying.
And look at this, guys. So somebody just wrote, it took them 40 minutes to do 4 companies, pillars. We're still going to do this on the show. Even though this is here, I still want to run through the numbers. I want to teach you guys about I want to teach you guys how to fish. The idea of this isn't just check mark. It's about understanding what questions you need to ask from this. This doesn't tell you anything besides, okay, this got 5 checks, 3 X's. It's about seeing where the numbers are derived from that's going to make you learn better about how business works and investing works.
Paul, Mattia asks, this last multiple, the price to free cash flow, on our website, will it consider the different multiples? Will there be a slider where you can take some of your assumptions in there in terms of growth and change that slider? What do you think?
Yes, it will happen that way. So guys, the great thing about the website and the bad thing about the website, to start, that's the only thing on the website. The future, it's going to be awesome. I'm adding real estate things. I'm adding a screener. I'm adding a stock evaluator like my Excel sheet. All these things I'm going to add to the site will come over time, but that's why I'm glad you guys invested early, because you all gave me money early at a cheap price. This is easily $50 a month software all day long. Some people are paying 8, some people are paying 12. It's just incredible for it. We will be doing a lot more as time goes on, and as we grow, we'll be taking a lot more suggestions from patrons on what we want to do to the site. But the great news about all this, guys, is Mo and I we're going to use this anyhow. So this is exactly what I was going to use when I was doing my own data research on companies. So everything I'm going to use, you're going to get. Even the momentum trading side. Now, from a legal standpoint, I have to be very careful at the momentum trading side, because if it's going to send you signals on things, I got to make sure it's your desired signals, not mine.
Mm-hmm. Paul, one of our OG, I'm talking day one OG patrons, JJ out in LA, just logged on. I love you, brother. Good to see you. Let's hit up Trader Mo behind me with momentum on Activision Blizzard.
So this has had a great run since, let's say, end of November. They've had a great run up, and I don't know what happened here in this little gap up. I'm assuming they maybe reported earnings last week or something, but I always talk about these W formations, and we need to be very careful with gap up. So our W's going long, we want to have the right side of the W higher than the left. And I typically say when there's a gap up, this gap needs to be filled, and the stock price will likely drop back down. Let's pull up a line chart real quick just to make sure this isn't. So they are creating some kind of W here. It's weak. It doesn't look like that. It's not defined, but there is some kind of support in here. So if you want to, let me go back to the candles real quick. If we get some kind of good engulfing candlestick, a green candle like that, you can go ahead and buy this thing. Just remember that it's a little bit more of a risk on trade because you're up over this 80% area. It does have a higher likelihood of turning down on you, but this company could
put in a tight stop loss or something like that?
I would definitely put in, so my general rule, when you're over 80%, use a trailing stop of 4 or 5%, just because it's a little bit more of a risky trade.
But whatever trailing stop you pick, stick to that forever.
Stick with it.
That's the big thing.
And guys, when it comes to Paul, this didn't really resonate with Paul because it wasn't a defined system. It's kind of subjective. You have to stick to the rules. Stick to these rules, and if you don't stick to your rules, you're going to get burned. That's just what's going to happen. So you got to do the same thing over and over and over. That's what this is about.
When I'm at the blackjack table and I've lost 10 hands in a row, guess how much I care?
None.
That's the same thing here.
Yeah.
The only time I want subjectivity is when it comes to my fundamental analysis, because I also bring my business intuition into the game. That's the difference why, that subjectivity doesn't work for me because I don't understand even why it's there. The fundamentals, I can understand the business aspect of things. Okay, well, they're increasing their debt. That's not good. The revenues decline. I can understand those things. That's how I can look at a company overall and say whether I like it or don't.